Let's talk to Nicole Elliott. She's a private investor and technical analyst. Very good morning to you, Nicole.
Hello, Luke.
Right, we are getting Chinese today. 3 thought-provoking charts full of Ichimoku clouds and things. Without further ado, the Shanghai Index. What's going on here?
Well, what's really happening is on Monday, the 5th of March, the National People's Congress meets.
Right.
Okay, now they've been on Lunar New Year holiday for a whole week, mid-February, yeah? So there's not been a lot happening market-wise in China because they're on holiday, right? Now, not only are they back to work, but back to work with a bang. And all 2,924 of their delegates are going to go on their annual meeting.
Right.
Now, big things are going to be decided here. First, for sure, President Xi Jinping is going to be elected for a second
forever.
5-year term. Well, no, one thing at a time. For a second 5-year term, for sure. He hopes the cap on the 2-year term will be lifted, and therefore, in theory, it could be forever.
Okay.
A la North Korea family. The other thing that's probably going to happen as well is that he will simultaneously replace the current head of the People's Bank of China. He's been doing the job, and a damn good job, I'd say, and he's 70 years old now. So it's time for him to retire. And Xi has handpicked this Harvard educated mate of his, a confidant, Liu He. I think I've got the spelling right. And this is very important because it could mean that you've got double whammy. Xi forever and a new monetary policy stooge of Xi's.
Okay.
Okay?
Sounds
So
like a monopoly to me.
Well, there's a lot to deal with. So the Shanghai Index is the sort of main one that people look at. It's the large state-owned enterprises, okay? It's the real big boys here. And as you can see, like everything else in February, it has an absolute collapse. Now, that's bad enough, but actually it had been the worst performing index in Asia in 2017.
Right.
So you already started from a pretty low base, right? But what you did do, you miraculously bounced from that interim low in February, which was exactly where we started in January last year. Do you see what I mean? So a year later, you're where you are. You haven't made any progress, and you're certainly not expensive, all right? That red dotted line across the top there is a Fibonacci retracement from the record high, which we hit in November 2007, and it was more than double where we are now.
Wow.
Okay, so, I mean, we're not talking about something cheap, we're not talking about anything record high, we're not talking, and you've had a fantastic bounce over the last nearly 3 weeks. I think this one is definitely one to consider buying because it's cheap and because of the way it's bounced. And because if you have everybody at the central bank and at the Congress pulling in the same direction, or maybe being whipped into the same direction depending on one's politics, you could see some really major changes in Chinese companies and attitudes.
So we like the Shanghai market. Let's move on to the Shenzhen. What index is this exactly?
Now, this is a different city. It's Shenzhen A shares. And this is mainly, it's dominated by smaller, privately owned companies. So that's why it's got such a different chart pattern. This is a monthly chart going back to 2007. And you can see that in 2015, we doubled where we were in 2007. So in a way, while this one has been a laggard in 2017 and actually closed down 5.5% on the year, it actually did much better than the other ones in 2013, 14, 15. And I think there's plenty of room on the upside. And what I particularly like is that in February, you had that downdraft like everything else, but you come right back up.
Snap back right up there.
And you close above that trend line, above the bottom of the triangle, and you create a hammer candle. A very powerful hammer candle. So this one I think is nicer. I don't think it's going to scurry away, do you know what I mean, and go bananas. But definitely, I think over the next 6 months or so, you could see some very nice rallies in this one, more so than the Shanghai, and it's got a bit of catch up to do here.
Okay, and I can trade this index?
Yes.
Perfect. Okay, let's wrap up now with The Chi next, what exactly is that?
This one is the growth and enterprise market, as it's known, and it tries to attract young, up-and-coming, high-tech. It's wannabe Nasdaq.
Right.
Okay, Nasdaq wannabe.
Right.
Okay, mini-me. All right. And unfortunately, as you can see, the trajectory since 2016 has been on a gentle downward slope. It is gentle, though. It is gentle. But I think it's definitely cheap. I mean, that's the one thing. It did in February, there's no doubt about it. It was cheap in February. It's still cheap now, today on the 1st of March. I think with a bit of luck, this sort of quite violent reversal that we've seen over the last 4 weeks is quite bullish, actually. We've tried to do something similar in July last year, July, August, but it was a bit sort of wimpy, really, wasn't it? It just wasn't good enough. But I think this one, you could see a decent bounce. Now, I'm only going to get really excited when I start breaking above the top of that descending trend channel and the descending cloud. But note how much narrower the cloud is becoming over the next 3 months.
And what is that a sign of, that narrowing of the cloud?
The thinner the cloud, the more likely you'll see a reversal in the medium-term and long-term trend.
Nicole Elliott, as always, as clear as the midday sun. Thank you very much indeed.